Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for NVIDIA Corporation, stock ticker NVDA. So as we can see here, we ended the week with a bit of a sideways consolidation for the stock. This comes after some fairly significant declines have been seen to the downside, and we have broken some fairly important support levels in the process. So what we'll be looking at in this video will be some of these specific price zones which should be used as sort of a guidepost for developing new trading strategies going forward. So currently what we can see here is that, ultimately we reached lows of 106.30 in share price action. This does come slightly below the support level that we've been watching in the stock for quite some time. In the comments, I've been mentioning this 107 level as an important downside target, and here we can see that we did slightly breach these areas on a very short-term basis. We did actually get some slippage in the stock. This is something that has occurred with some other stocks in the Mag 7 as well. If you look at my video on Amazon that I just posted, there was some similar price action there where we did hit these important targets, but there was a bit of slippage, and we did see sort of a long wick on these candles, and we did, giving a bit of extra fall through, to allow share prices to kind of even breach these support levels to a greater extent. But currently, what we're looking at here with NVIDIA would be this prior support level that we've been watching here, which comes in just below the 50% Fibonacci retracement of this dominant trending move. So specifically what we're looking at would be the lows from April 19, which came in at $75, $75.61. And then, of course, these all-time highs, which posted during the June 20 trading session, coming in at 140.76. If we use this price move here, we can really see that the 50% retracement of this move coincides very closely with this support bounce, which has currently been seen. We can kind of zoom in here a bit. That's this white line back here. So we can really see that, current price action is coming into very close contact with this target that we have outlined previously. So we did see sort of a bounce out of here, but currently what we're really looking at here is a period of sideways consolidation following that bounce. So there is a strong possibility here that this bounce could be short-lived, but it is very interesting to see that, this bounce does occur, exactly where we have outlined previously, as the 50% retracement coincided with the lows from May 31st, which came in at 106.94. This really is the reason that we were watching this level. As we can see here, this is almost exactly where prices targeted and finally bounced a bit. We don't want to get too optimistic here. The reason we don't want to get too optimistic quite yet is because we're still looking at a negative indicator condition in the relative strength index. That would be the purple line at the bottom of the chart. So as we can see here, the stock has been showing negative trend momentum since just before the all-time highs were posted toward the middle of June. So currently, this is the dominant momentum condition that we're currently seeing. So it's not really surprising that we are seeing these downside price moves. So this is something that we will need to be watching here going forward. Of course, we did slightly breach this 107 level. It really came in just above 106.90. And we did see prices extend another 60 cents to this 106.30 level. And this will be the level to watch going forward. As we can see here, this does coincide quite closely with the 200 period exponential moving average on the 4-hour chart. That would be this rising blue line here. So overall, we do see a bit of support here to the downside, but we're starting to run out of potential support zones here relatively soon. So from here, from this 200-hour, 200, it was really a 4-hour chart. So I should say the 200 period exponential moving average on the 4-hour chart. To the downside, the next level that we would be watching would really come in just above the $100 mark at $100.30. The reason that we would be pointing to this level would be the fact that it rests at the 61.8% Fibonacci retracement of this dominant trend move. So this would be expected to sort of alleviate the selling pressure a bit, or to sort of attract new buyers to enter into the market if we do see prices decline to that point. On the top side, what we're currently looking at here would be a trading volume condition, which does sort of lend some support to the positive outlook here. As we can see here, we're currently looking at some positive trading volumes, which means that we're seeing a bit more buying activity than selling activity while prices are sort of declining to these lows. Not totally surprising, given the fact that this was an important support zone, which is an area that we have pointed out previously, just below 107. So we're not entirely surprised here to see that buyers are starting to enter into the market at this point. So the real question at this stage will be whether or not this short-term bounce can really sustain itself. Are we likely to start seeing a resumption of the downtrend, or will we see some positive upside price breaks here going forward? If we do see some positive price breaks, what we would really be looking for would be a breach of this area here, which would be the top of the exponential moving average cluster, as well as the prior price highs from July 23rd. So these highs came in at 124.69. So this is just south of the 125 marker. And if we did see a break above here, we would expect there to be some sort of relief to the stock, and we would expect to see prices start to move higher once again. So currently, we sort of have these two factors here fighting against each other. One would be this rising condition in the trading volumes, but then at the same time, we still have this negative condition in the relative strength index. So currently, this is going to be a question of which side sort of wins out from here. And here are the price levels that we will be watching going forward. So here's the current market analysis for NVIDIA Corporation, stock ticker NVDA.